48 hours. That is all it took to change the rules of the game. If you were watching the news this morning, you saw 3 headlines. They probably looked like random noise. First, a drone strike hits the U.S. Embassy in Riyadh. Smoke is rising over the diplomatic district. Second, Amazon Web Services, the digital backbone of the region, goes dark in the UAE and Bahrain after a coordinated physical attack on its data centers. And third, a number on a screen. The US dollar index, or DXY, smashed through a ceiling that traders have been watching for months, hitting 99.34. Most people see a war, a blackout, and a stock chart. They think these are 3 different stories. They are wrong. This is one story. It is a single coordinated signal. And that signal is telling us that the structure of the global economy just broke. You need to understand why this specific combination of events is terrifying. We are used to seeing missiles fly in the Middle East. Sadly, that is normal. But we are not used to seeing a kinetic military strike coordinate perfectly with an attack on digital infrastructure. Think about that. They didn't just bomb a building, they bombed the cloud. When you hit an embassy, you send a political message. But when you hit a data center in Bahrain, you are not trying to kill soldiers. You are trying to kill the economy. You are shutting down the banking apps. You are blinding the logistics networks. You are turning off the lights in the digital world. This creates a new kind of panic. It's not just about safety anymore. It's about access. And that is why the dollar just exploded to 99.34. That number is the fear gauge. When the world is calm, money goes everywhere. It goes to emerging markets. It goes to tech stocks. It goes to Europe. But when the world catches on fire, money runs home. It runs to the only place that can survive the heat. It runs to the US dollar. So why now? Why did the Middle East erupt this week specifically? We have to look at the chain reaction. In physics, for every action, there is a reaction. In geopolitics, the reaction is usually 10 times worse than the action. The trigger was the removal of the supreme leader. When Khamenei was removed from the equation, the world held its breath. The status quo was broken, a power vacuum opened up, and in the Middle East, vacuums are filled with violence. Everyone expected a response, but nobody expected this response. The countermove wasn't a temper tantrum, it was a precise, calculated encirclement. Look at the map. The strikes hit the UAE, they hit Bahrain, they hit Riyadh. These aren't random spots on a map. These are the lungs of the global energy trade. And by striking them, the opposing forces prove something dangerous. They prove they can reach out and touch the most sensitive parts of the Western economy whenever they want. This explains the evacuations. The U.S. State Department didn't just issue a warning, they issued orders. Get out. Non-emergency personnel in Bahrain, Iraq, and Jordan were told to leave immediately. Families were put on planes. This is not a drill. When the diplomats leave, it means the talking is over. It means the safety net is gone. This brings us back to that attack on Amazon. We need to stay on this for a second because it is the key to understanding the next month of your life. In the past, war was about taking land. You invade a country, you plant a flag, you win. This is different. This is hybrid warfare. By targeting the data centers in the UAE, the attackers bypassed the military completely. They went straight for the wallet. Modern economies run on servers. Your credit card, your GPS, your supply chain, it all lives in those buildings. If you can physically destroy the data, you can paralyze a nation without ever fighting its army. It is a siege. But instead of surrounding a castle and cutting off the water, they are surrounding the economy and cutting off the data. This is why the market is panicking. The algorithms that trade stocks and currencies don't know how to price this in. They know how to handle an oil spike. They know how to handle a recession. They do not know how to handle the physical destruction of the digital grid in a major financial hub. So the money did the only thing it knows how to do. It fled. It looked at Europe and saw a disaster waiting to happen. Europe needs imported energy to survive. If the Middle East burns, gas prices skyrocket, and the European economy stops cold. The euro becomes risky. It looked at Asia. Japan and China are net importers of oil. If the supply chains break, their factories stop. The yen becomes risky. Then the money looked at the United States. And this is the safe haven mechanic you need to understand. The United States has its own oil. It has its own food. It has 2 oceans separating it from the chaos. In a global crisis, the U.S. is the house made of brick, while everyone else is living in houses made of straw. That is why the DXY hit 99.34. It's not because the U.S. economy is perfect. It's because everywhere else is suddenly uninvestable. The dollar is strengthening because it is the last man standing. But there is a trap here. A strong dollar sounds good on paper. In reality, when the dollar gets this strong, this fast, it breaks things. It crushes countries that owe debt in dollars. It makes American exports too expensive. It acts like a wrecking ball swinging through the global economy. We are watching a kinetic chain reaction turn into a financial crisis in real time. The embassy strike was the match. The data center attack was the gasoline. And now, the dollar surge is the fire spreading to your portfolio. This isn't going to stop in 48 hours. The timeline has shifted. We aren't looking at a quick skirmish, we are looking at a fundamental restructuring of how the world works. And to understand where this goes next, we have to follow the money even deeper. Because while the dollar is going up, something else is moving in the shadows. Something that explains why this attack wasn't just about territory, but about energy dominance. To understand the shadow, we have to look at the map. Most people look at the Middle East and see a list of countries, but military strategists see a chessboard. And on this board, 3 pieces just moved at the same time. We call this the kinetic chain. For years, there was a balance, a cold war. Everyone knew the lines they couldn't cross. But the moment the leadership structure in Iran changed, specifically the removal of Khamenei, that balance evaporated. The old rules died with the old guard. The new strategy isn't about holding ground, it is about encirclement. Look where the missiles landed. They didn't hit random villages, they hit the 3 pillars of Western influence in the region. First, they hit Riyadh. That is the political center. By striking the embassy district, they told the United States, you are not safe in your own house. Second, they hit the UAE. That is the trade center. The UAE is where the money lives. It is the playground for global business. Third, and most critically, they hit Bahrain. Bahrain is the banking hub. It is a tiny island, but it holds massive weight in the financial sector. By striking all 3 simultaneously, the opposition created a ring of fire. They proved they can shut down politics, trade, and banking in a single afternoon. But there is a 4th front that validates the severity of this chain: Tel Aviv. While the Gulf was burning, Hezbollah was active in the north. Missiles and drones began raining down on Tel Aviv and northern Israel. This is the force multiplier. It forces the US and its allies to look in 2 directions at once. You cannot focus on saving the data centers in Dubai when you have to defend the skies over Israel. This splits the defense, it stretches the resources, and it creates the chaos necessary for the next phase of the attack. This is where the Amazon AWS blackout becomes terrifying. We need to be very clear about what happened here. This wasn't a hacker in a basement writing code. This was a kinetic strike on a physical building that houses the cloud. The attackers know that the modern economy doesn't run on oil anymore. It runs on data. If you blow up a pipeline, you lose money. If you blow up a server farm, you lose the memory of the banking system. You lose the ability to track ships. You lose the ability to process payments. They targeted the Amazon facilities in the UAE and Bahrain because they are the nervous system of the region. By taking them offline, they didn't just break a few websites. They blinded the financial institutions that rely on that data to function. It is a chokehold, and it is working. Now, you might be asking, if the Middle East is collapsing, why is the US dollar getting stronger? Why is the DXY pushing past 99? Usually when there is a war, markets crash. But right now, the dollar is rallying. Here is the atomic truth. It comes down to one simple concept: energy independence. This is the safe haven mechanic. 30 years ago, if the Middle East exploded, the US economy would collapse. We needed their oil. We were dependent. We were vulnerable. Today, the United States is the largest oil producer in the world. We have Texas. We have the Permian Basin. We have shale. If the Strait of Hormuz closes tomorrow, the price of gas in America goes up, yes, but the lights stay on. The factories keep running. Now look at Europe. Look at Asia. Europe does not have oil. Europe relies on imports. When missiles fly in the Gulf, the price of energy for a German factory doubles overnight. Their costs explode. Their profits vanish. That is why the euro is crashing against the dollar. You saw the number, 1.16. That isn't just a fluctuation. That is investors doing the math. They know that a long conflict in the Middle East destroys the European economy, but merely inconveniences the American economy. The same applies to Japan. The yen is trading at 157 to the dollar. Why? Because Japan imports almost all of its energy. A war in the Middle East is an existential threat to Tokyo. It is a Tuesday for Washington. This is why the money is moving. Investors are not buying the dollar because they love the US government. They are buying it because it is the least dirty shirt in the laundry pile. The DXY index simply measures the distance between the US and the rest of the world. As the risk of a global energy crisis rises, that distance gets wider. The mechanism is brutal. When fear hits, global trade stops. When trade stops, emerging markets can't pay their debts. To pay their debts, they need dollars. So they sell their own currency to buy dollars. This pushes the dollar up and their currency down. It is a feedback loop. The worse the situation gets in Riyadh and Tel Aviv, the higher the dollar goes. But there is a dark side to this strength. A dollar at 99.34 is a wrecking ball. It crushes developing nations. It makes it impossible for countries like Turkey or Brazil to pay their bills. It creates a global liquidity crisis. We are watching a transfer of pain. The physical pain is happening in the Middle East with drones and missiles, but the economic pain is being exported to every country that depends on imported oil and dollar-denominated debt. The kinetic chain has started a fire. The safe haven mechanic is sucking the oxygen out of the room. And now that the dollar has breached this critical level, we are entering a new window of time. The experts are calling it the escalation ladder. And according to the latest intelligence, we have about 4 weeks before this climbs to a level we can't come back from. This 4-week window is critical because of a concept called the dollar wrecking ball. When the DXY crosses 99, it stops being a measuring stick. It becomes a weapon. And right now, that weapon is pointed directly at the allies of the United States. We have to look at the casualties, not the soldiers, but the currencies. The euro is bleeding. It dropped to 1.81. That is a massive move for a major currency. The analysts at ING are calling this an energy shock. But let's simplify that. Europe is walking into a double trap. Trap 1, the price of oil is going up because of the drone strikes. Trap 2, the currency Europe uses to buy that oil, the US dollar, is getting more expensive. They are getting hit from both sides. They have to pay more for the fuel, and their money is worth less when they go to pay for it. This is how you get stagflation. Prices go up, growth goes down. It is the economic equivalent of suffocation. This is why the euro is collapsing. The market knows that European factories cannot survive high energy costs and a weak currency at the same time. Now look at Asia. The devastation is even clearer. The Japanese yen is trading around 157.889 against the dollar. That is a disaster. Japan imports almost everything. They need to buy food. They need to buy fuel. When the yen is this weak, the cost of living for a normal family in Tokyo skyrockets. Then look at the Australian dollar. It fell below 0.70, sitting at 0.6989. Australia is a proxy for global growth. When the Aussie dollar crashes, it means the world has stopped building things. It means China is slowing down. It means the global supply chain is freezing. This confirms the safe haven theory we talked about. Investors are looking at these numbers, 1.15 for the euro, 157 for the yen, and they are running for the exits. They are dumping everything to buy US dollars. But here's the twist. This creates a doom loop. As investors sell euros to buy dollars, the dollar gets stronger. As the dollar gets stronger, oil gets more expensive for Europe. As oil gets more expensive, the European economy gets worse. As the economy gets worse, investors sell more euros. It feeds itself. The panic builds the fire. This is exactly what the attackers in the Middle East want. We have to stop thinking of this conflict as just missiles hitting sand. This is economic warfare. The strategists in Tehran know they cannot beat the US military in a head-to-head fight. They would lose in a day. So they are not attacking the US military. They are attacking the US alliances. They are driving up the cost of energy to break the back of the European economy. They are betting that if they make the pain severe enough, Europe and Asia will pressure the United States to back down. They are holding the global economy hostage. The signal of 99.34 on the DXY is telling us that the ransom note has been delivered. The market is pricing in a fracture. It is betting that the United States will be fine, but its friends will not. It creates a diplomatic nightmare. How does Washington keep the alliance together when the American dollar is the thing crushing the allied economies? This brings us to the most dangerous part of the signal, the yield. When money floods into the US, it buys bonds, it buys safety, but it also dries up liquidity everywhere else. Emerging markets, countries like Brazil, South Africa, and Turkey, borrow money in dollars. When the dollar hits 99.34, their debt becomes unpayable. We are now on the verge of a sovereign debt crisis. If one of these countries defaults, the banking system takes a hit. If the banking system takes a hit, credit stops. If credit stops, the world stops. We saw this in 2008. We saw this in the late 90s during the Asian financial crisis. A strong dollar is usually the first domino to fall before a global recession. So we have a kinetic war in the Gulf, closing off energy supplies. We have a cyber war in the cloud, shutting down data. And we have a currency war crushing the global supply chain. These are not three separate events. They are three heads of the same monster. And the scary part? We haven't even talked about the political response yet. Because while the markets are screaming, the politicians are planning. There is intelligence suggesting a 5-week escalation plan. The US president has already hinted at it. The oil markets are sniffing it out. The price of crude is pushing $75, but the options market is betting on $100. $100 oil breaks the world. And we are one headline away from it. The question you need to ask yourself is not, will the dollar go up? The question is, what breaks when the dollar hits 100? Because 100 isn't just a number. It's a psychological breaking point. It is the moment where the system stops bending and starts snapping. And based on the trajectory of the last 48 hours, we are going to hit that wall sooner than anyone thinks. The momentum is vertical, the panic is real, and the haven is becoming a crowded room with only one exit. We are entering the kill zone. That is what military planners call the 4-week window after a major escalation. The first 48 hours are about shock. The next 4 weeks are about leverage. And right now, the leverage is shifting violently. You have heard the predictions. Former President Trump and other geopolitical analysts have flagged a 5-week timeline for this conflict to spiral. That isn't a random number. That is the time it takes to move aircraft carriers. That is the time it takes to reposition missile batteries. That is the time it takes for an embargo to strangle an economy. The markets know this timeline. That is why they are panicking. The dollar, sitting at 99.34, is not a finish line. It is a warning siren. The traders in London and New York are pricing in a month of absolute chaos. They are betting that the diplomatic talks will fail. They are betting that the ceasefire is a fantasy. And they are terrified of the number 100. If the DXY crosses 100, we leave the realm of correction and enter the realm of crash. Psychologically, 100 is the breaking point. When the dollar index hits triple digits, it triggers algorithms that automatically sell off emerging market assets. It forces margin calls on sovereign debt. It is the financial equivalent of a circuit breaker tripping in a burning house. The lights go out and everyone is left in the dark. This is where the oil price becomes the detonator. Right now, oil is pushing 75. That feels manageable, but look at the trend line. It is vertical. The options market, the people who bet on the future price, is loading up on calls for $100 oil within the next 30 days. Think about what that combination does. If you have $100 oil and a dollar at 100, you have the perfect storm. Most countries buy oil in dollars. If the price of oil goes up and the price of the dollar goes up, the real cost to a country like India or Japan doesn't just double, it triples. It creates hyperinflation in the energy sector. It shuts down power grids because governments literally cannot afford to buy the fuel to run the turbines. This is the 4-week horizon. Week 1 is the currency shock that is happening right now. Week 2 is the supply chain freeze. Ships stop moving because letters of credit get rejected by banks. Week 3 is the energy rationing. Factories in Europe and Asia cut shifts to save power. Week 4 is the political collapse. Governments that can't keep the lights on get overthrown. This is why the attacks on the Amazon data centers in the UAE were so specific. They were a signal that the infrastructure itself is fair game. The enemy knows that the West can print money. They know the Federal Reserve can create liquidity. But the Federal Reserve cannot print a new server farm. They cannot print a new oil pipeline. They cannot print a new shipping lane through the Strait of Hormuz. The vulnerability isn't financial, it is physical. And this brings us to the most uncomfortable truth of this entire situation. The surging dollar is masking a much deeper rot. Americans look at the strong dollar and think it means the U.S. is winning. It feels like a victory lap. Our money is strong. Their money is weak. That is a dangerous illusion. A dollar this strong creates enemies. It forces the rest of the world to look for alternatives. When you weaponize your currency to crush your opponents, you eventually force them to build a new system. We are seeing the acceleration of a bifurcated world. One block runs on the dollar and American energy. The other block runs on something else, likely gold or a basket of commodities, desperate to escape the wrecking ball. The explosion in the Middle East didn't just break buildings. It broke the trust in the global financial system. The signal of 99.34 is telling us that the glue holding the global economy together is dissolving. The safe haven trade has worked for a while. It works until everyone is inside the boat, and the boat becomes too heavy to float. We are watching the end of an era. The era of cheap energy, cheap shipping, and a stable global reserve currency is effectively over. The new era is about volatility. It is about physical assets. It is about who controls the flow of energy and the flow of data. And while the dollar is the story today, it is not the story that will define the next decade. The real story is underneath the ground. It is in the cables that connect the continents. It is in the vulnerable choke points of the global energy grid that just got exposed by a few cheap drones in Saudi Arabia. Because if you think a data center outage is bad, wait until you see what happens when the physical transformers that power the entire Western Hemisphere are targeted. The blueprint for that attack was just revealed, and the weakness is much closer to home than you think. Click this video right here. I break down the specific vulnerability of the global energy grid and why the next attack won't be on a currency, but on the wires that keep your lights on. You need to see this map. Click it.